All right, all right. Today was a very volatile day as we did have FOMC. And during the press conference, Jerome Powell was going a bit off script and he was talking a lot about tariffs and retaliation. And let's just say he got very off script, which is not typical of what he has been doing in the past. And the market immediately started to get risk off. And I talked about last night how easy this market was to trade because we had this trading range on SPY between 602 all the way up to about 608. And below this range breakdown, I told you we could easily go to 598 and 593. And as you can see, we even broke down below 593 and we're going down towards 584. So this is the benefit of following price, is because we had this bull trend, there was nothing to tell us to get off of that bull trend unless we broke down below 602. And last night, I specifically was talking about the risk in the market with all of these lower highs, that if we broke down below 602, that was going to be your indication from price to move like water and get risk off. And as you can see here, that saved you a lot of pain if you were going long on the bull trend and you knew to get risk off below 602. You prevented an additional 2.7% drop below that support. So this is the benefit of following price. There could have been a scenario where we blasted off and we went straight into the 616 zone, but that would have required the break above the top of the range at 608. And of course, we got the bottom of the range break at 602. So when I talk about following price and moving like water, that is exactly what I am talking about. And as you can see with today's sell-off, this is definitely a high volume capitulation day. So when you look at a day like this, you have to ask the question, is it worth buying the dip? And this is without a doubt a dip worth buying, because more than likely what is going to happen is we are just going to go a little bit lower towards 584 and then immediately start to snap back and at least go towards 593. So we'll just keep it very simple in the short term. There is a very good chance we are going higher after a day like today. It is just a simple knee-jerk reaction and a dead cat bounce off of the low. So yes, it was risk off below 602, but as we're coming in towards 584 to 585, that is your time to start adding back risk. And of course, the further risk to the downside would be this gap fill at 576. So you know the risk to the downside now, you know the reward to the upside. All you need to do is watch price right around 584. Move like water. We did break the bull trend support line, so that is definitely something you should be aware of, because at any time a market tops, you are going to see a shift in behavior and trend in price. And this was the first day of a shift in price. And now we could start to develop a bear trend, which means as we bounce, we would be looking for opportunities to get lower high rejections from resistance now. This is no longer a bull trend while we are trading down below 593. It doesn't mean we won't bounce, because there's a very good chance we bounce, but we're not going to be looking for a brand new all-time high off of the bounce unless we can start to regain confidence that we can break through resistance and hold this bull trend. So follow everything the chart is telling you. Right now, price on the chart is telling us risk off, and that was evident by the breakdown below 602, which was the bottom of the range we were watching from last night. Follow price here. If you do not like volatile markets, it is going to remain a volatile market. The VIX was up over 73% today. So without a doubt, there is fear and there is volatility. If you do not do well in volatile markets, just sit in cash on the sideline and watch without risking any money. I personally love trading volatile markets, and this is a very volatile market we're going to have from this range with a $10 move in either direction. And to me, that is definitely worth trading. So have a plan. These are the levels you're watching above and below 584. I do believe the bulls are going to have the advantage on a bounce, and then the bears will likely start to try to take back over control. And that is when we will decide if the bull trend is over and the bears are taking control, or if the selling is all done in one day and we're going back higher. On the NASDAQ 100 triple Qs, we were down 3.61% today. And this was what I was drawing last week, that we would likely come up here towards 534. And then from there, we would pull back to fill this gap at 517. And as you can tell, that happened very quickly because we were only one day above 574, started to pull back with an inside day, and then gave it all away with one swift motion to the downside. And that's why the saying is the bulls take the stairs up and the bears take the elevator down. And as you could tell, that was clearly an elevator down to fill that gap at 517. Now from here, it is a very good chance, just like I was talking about on SPY, that we are going to bounce off of this support. And the triple Qs were lagging behind SPY, and I still do think the triple Qs have the most to gain in a month like December because they were lagging behind, and we're just now getting into the support trend line and retest of this breakout at 514. I do believe there's a very good chance from 514 and that gap fill zone that we're going right back higher towards 525. Now, once we get to 525, there could be a possibility the bears continue to take over control and we get that correction that I was talking about into January. But if the bulls are still in control and we don't break support, there's also the possibility we just continue higher for a brand new all-time high by the end of the year. So anytime you get a day like today, it is definitely going to be a volatile market the next following day. And this is where you really just want to have a trade plan, because these are both very solid trades, whether we go higher or go lower. And nobody knows for sure which scenario is going to play out. But if you are prepared to trade both of them and you let the chart do all of the talking, you will still do very well. Remember, we are traders. We couldn't care less if the market's going higher or lower. We simply want to make money and be on the right side of the trade. And these are very good scenarios that are likely going to play out. So you don't need to guess which one is going to play out. You just need to let the chart tell you and then react to it. So from 514, that is an opportunity to look for long trades up to 525. Once we get to 525, we'll be looking for evidence of sellers. If we get there, we will be looking for another leg lower. That could easily take us down into the low 490s. Above 525, we can continue to push for that brand new all-time high in the 540s. So be prepared for both of these. I will continue to give updates on these charts, but more importantly, don't forget that I have my own trade alert service where you get the exact percent allocations that I'm doing for the TQQQ or SQQQ. And today, when the triple Qs were down 3.6%, we had a ton of cash and we were able to start reacting with that cash, and we are going to do very well from here. So if you want my exact percent allocations that I'm taking for the TQQQ and SQQQ, that is the Stocks Channel Trade Alert service, which you can find out how to join in the link in the description of this video. And then finally, a very quick update on Bitcoin. We are getting that rejection from the price target at 108,000. And I will remind you, I think Bitcoin is very risky here because I think it could easily come down to 84,000 and there's just not enough upside reward. Even if it did go to 118,000, that reward is not worth the risk at 84,000. So you can continue to stay bullish on Bitcoin above 92,000, but as you can tell, we're already in jeopardy of breaking down below support at 102,000, but we are still above a rising 20 daily moving average. So if you're long Bitcoin, there's no reason you should panic sell it, but you definitely shouldn't be buying it up here at these levels. It is just way too damn risky. So keep in mind what I said, it's going to remain a volatile market from here. The VIX is currently up above 27 with a 73% gain day. So that is definitely a lot of fear, which is going to bring in a lot of volatility, but volatility does work in both directions. And I do believe some of these support zones are worth buying the dip at. So you can find out how to join my services in the link in the description of this video. The Stocks Channel Trade Alerts will give you the exact percent allocations that I'm taking for the TQQQ or the SQQQ. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.